All right, we are live. What is up, Roy?
Not the markets.
Not the
Not my
markets. The
portfolio.
markets are absolutely very much down. My hair looks extra fucking white today. Jesus Christ, man. I think I'm getting more white hairs every day, every red day.
Yeah. I mean, that's kind of the way it goes. Are you down year to date now? Or are you still up?
I have not checked. I don't check on red days, man. You know that.
Yeah. No, I went
need to
down
check.
today. I'm down like 0.5% year to date, which is like, oh, that's not that bad, flat. And that happens is like, well, but when you're up like 40, close to 40% year to date 3 weeks ago, that's a big drop. And I had hedges.
I think I'm down on like my normal portfolios, but I'm up on my wheeling portfolio because I sold off a ton of hymns in the 40s because I got my calls assigned, which turned out to be a blessing because right now it's lower than that, and I'm just doing more cash secured puts. So because I locked in those gains, I think I'm up year to date, but otherwise I would definitely be down. I'm down on my other accounts for sure.
Yeah, Hims was at 40.30 in after hours, so it's like right there where you sold it at.
Pretty much, yeah.
I actually sold some cash secured puts on Hims, so if it goes lower, and I expect it probably will, Hims could go to like 30, 20,
for sure.
15 again. Like who knows in this environment?
What strike price?
Oh, 37. So because I didn't mind, I had a really the premiums are very juicy, and I don't mind if basically it's a $35 in net if it ends up filling, and I'm fine with that on Hims. And I'm fine and prepared for it to go further down. I'm fully prepared for psychologically for Hims to go down into the teens again. Could happen.
How is it going, everyone? Glad to see the whole gang is here. I love to see it. Yeah, back-to-back bootleg weeklies for us, which is quite fun.
So like yesterday was really bullish.
Yesterday
and 24 hours later, not so bullish.
The mofo introduced more freaking tariffs, man. More tariffs, more problems. That's how it goes.
Yeah, I like the most challenging thing right now. Markets do not like uncertainty. They do not. So if let's take a hypothetical. Let's take politics out of it. Let's pretend that there is a company, ticker XYZ, because not Block, but that used to be like the fake company ticker, and freaking Block took it, and I'm so upset. But
yeah,
XYZ, but not Block.
I mean, we can take
have an erratic.
We don't have that anymore.
Yeah, we got to figure out something else. Like, but freaking Jack Dorsey. So let's say Mac Dorsey is a CEO, and he comes out and he's so erratic that like every day, like he's tweeting out some new like major shift for the company and saying, oh, we're not going to sell to this country at all, or we're going to sell, but we're only going to sell these products, or actually we're shifting our entire market. We're uprooting from India and we're going to go over to Vietnam. And then like the next day he reverses the decision.
Yeah.
You know what's going to happen to that ticker? It's going down really fast. Even if they're good changes, even if over the long term it makes perfect sense, you can't be erratic as a CEO of a company and expect the market to actually appreciate it. Donald Trump has done that for the entire U.S. economy. And it's so erratic. You don't know like what's real, what's not real, if it's a threat, a negotiation tactic, if it's going to be like 2 weeks from now, like the tariffs could be completely gone. They could be jacked up to 50%. And companies, like it has to be just a nightmare for companies right now because, if they're thinking about doing anything internationally, they can't. They don't know what it's going to be like 2 weeks from now. And so the market is tanking. Usually I'm a buy the dip type of person. Right now I'm like, man, freaking sell the dip for the most part.
Really?
This is terrible. It's no way to run a country. It's no way to run a company. I voted for the guy. I don't. You basically had no alternative, honestly, with who was running. But tariffs were the part that I was like, I don't like this. I don't like tariffs. I hope it's just a negotiating tactic. I hope he doesn't mean it fully. No, he did, and even more so. And the worst thing is, and we'll get into like how precipitous this really is. the amount of tariffs that he's raising within 100 days of his term was less than, like, I think it took like 2.5 years to hit even close to similar levels. If you do it gradually, the market can price it in. Companies can figure out what to expect. They'll know, like, well, maybe it'll be a little bit worse, but it's not going to be like this rug pull knee jerk thing. But that's what we're getting, dude. And it's so freaking bearish because I don't know when, like, U.S. economy is going to be fine. Maybe we'll have a recession. Maybe we won't. Like, if it is, it's some of it. Some of the reason isn't bad. We'll talk about that too. But dude, you can't have this level of knee-jerk reaction and uncertainty every single week, multiple times per day. State of the Union addresses tomorrow, like, it's going to probably be like a 1.8. It's terrible.
Yeah.
So yeah, I'm very unhappy.
Elijah asked where the suit is. The suit is gone. The suit.
I had to sell the suit. Yeah, it's gone. And I'm not buying the dip. I'm just, hoping that my portfolio doesn't go to zero at this point. I'm very glad, by the way, in days like this, and I am feeling pretty freaking bearish right now, just because it's so erratic. You cannot, like, how can you buy the dip? You don't know what to expect. I don't know what to expect. I don't know that Donald Trump knows what to expect. This is just a nightmare scenario, honestly, for companies and businesses. There are some silver linings, and we'll look at those. I've sold a couple of things and raised a little bit more cash. I'm not like selling any of my like main core positions or anything, but like, how can I buy the dip when it's like this?
No, I made a post on Twitter just now when we went live, and I said it only took 24 hours for us to go from Donald Pump to Donald Dump. So that's where we are right now. That's everything's down. Everything's down by quite a bit. I think every single thing in my portfolio was red. Yes, even Roy Bear is excited. Roy Bear, who thrives in these situations, is frustrated today. And I understand. I totally get it. I was actually hoping to do some cash secured puts or something today. And I'm kind of glad I didn't because I was like literally back to back slammed in meetings all day. And so I just didn't have time to really like look at the strike prices and determine, probably do it tomorrow. But I'm glad I did it because it just continued falling throughout the day. And
and we could have a complete reversal tomorrow, but like, you can't trust the market at this point. And it's not the market's fault. It's the president. And I'm sorry to interrupt. You go ahead, Tevis, and then I'll add some thoughts.
No. I agree with you, man. I'm just, bro, I've been on fucking phone calls literally since like 9:30 until now. Like I was literally on one right before I hopped onto this. So my brain is absolute pudding, and I love the fact that you're just you're animated tonight, which is amazing. But like it's weird, man, because so I had a friend of mine who was saying, oh, well, it's actually good that the market's falling because it's good for you guys because you write cash secured puts. And I was like, yeah, mofo, but if it only keeps falling every single day, you're going to run out of money very quickly. And that's sort of what like. We are not having any strength in any of the moves. Like I thought today, I was absolutely going to get shares underwater for covered calls for the miners. And even they ended up the day red. And I was like, how do you end up the day red when you have a national like strategic reserve, like this thing that you've been waiting for a long time? Robinhood ended up the day like 7% down.
Yeah, and it was like 10% up. Like that's a 17% swing. And like the thing is, you and I talked about plenty of other dips. And we usually try, if we're able to like cover them live, like going back to the yin carry thing. And it's like, well, it could last for a little while, probably a credible dip. I'm buying. And time again, I'm like, I'm buying. There was one where I was like, I'm not sure, and I'm not going to do anything different. Usually that's the right thing to do when you're not sure. Like here, I'm not going to sell, but I freaking feel like selling. Like just, I'm not going to do that though. That's emotion. And I can feel like I'm not a robot. It's okay for me to feel. I just don't make decisions based on that. So probably tomorrow, I'm probably not going to get on X at all, period. I probably won't look at my portfolio, period. And I may just do that for the next few days. Tomorrow's a very busy day for me, thankfully. So Wednesday also. So
let me ask you this, Roy. Like, what is different about this time around? We've had dips before, and you've always been by the dip, Roy. So what's different now? You just don't trust that, Trump is going to backtrack on his word and introduce more tariffs, or what is the thought process around even considering selling or feeling like you want to sell?
Because it's complete uncertainty right now, and that's one of the reasons why. Here, let me throw up this here. Do I have it? Yeah. So, and we'll look at a lot of charts. I know Nala likes charts. We talked about the 10-year yield. I think, did we talk about it yesterday? That's it, right there. No one can predict Trump. I wouldn't say he's not stable. Maybe that there's a plan here, but like we don't know it. Like we kind of know it. He's hinted at some things, but one of those plans may be, and I think that this might be intentionally some of this to crash the 10-year yield, 10-year Treasury yield. But part of the reason why this is crashing, it's not about manufacturing numbers only or anything. Like this is quite the drop. This is a demand thing that a lot of people are moving away from risk on assets to risk off, very much so. And so a lot of people are clamoring for 10-year Treasury. Bonds are probably going to perform very well in this environment as it continues because people are like, okay, I can't predict what in the world is going to happen with the market because Trump may wake up and just be in a bad mood and just say, okay, 100% tariffs on, Mexico. 150%. Why not? 3,000%. You just absolutely crack it. And so like, why not just take the 4.13% yield? Like, I'm not going to do that, but I understand why people are. And that's why this has gone down this is a huge drop for bonds in one single day. Well, no, I'm sorry, one single week. I was like, wait a minute, that's not a day. So it's tough. And that's really what makes it different is, okay, so yen carry trade day is like, okay, is it like the way that the VIX spiked, the way that the RSI bottomed, the way that fear just was introduced to the market, the precipitous declines is like, does that make sense in light of like COVID, in light of, invasions and war, compared to those dips on that? Like, it's like, okay, this has even more fear. That didn't make sense at all by the dip. DeepSeek, it took me like a day or two. And like, no, this is absolutely ridiculous. It's actually bullish. And it's an incredible opportunity. I'm buying the dip. I don't remember all the other dips, but like every other one was like, market's way overreacting. Like this time, I if anything, I think the market has underreacted, and I don't like that.
So what I'm seeing here is I'm seeing two sort of opposing viewpoints, and maybe you can help reconcile them. So first viewpoint, Sagig says the problem is Trump is losing credibility. If he reverses at some point, it may not help the market because the market may not believe him next time, and that it's a thin line he's walking by essentially being the boy who cried wolf like every single day, and then pushing back his tariffs, and then saying we're going to have peace, and then saying we're not going to have peace, and just essentially walking back all of his statements. It's going to create more uncertainty, and people are not going to trust it. And then I saw this other comment. June is saying basically, if I can extrapolate, the more he does this, the more the market is just going to decouple and get desensitized from Trump. So it doesn't really matter what he does. The market just won't care in 6 months. Which of those two sides of the argument are you taking?
I mean, they're both right. Like, if he continues to do this, and he may well, like this is an even more animated Trump and very much more active than his first presidency, and he was not inactive. Like he called Joe Biden like Sleepy Joe, but honestly, like Sleepy is good for the markets because they kind of know what to expect. If he keeps switching things back and forth all the time, I mean, at a certain point, the markets will kind of get used to Trump and then react not quite as much, but it's going to take a while. And I think the more that he flips and changes overnight, the less volatile things will be, just because the market won't know how to fully price that in or not. But it'll take time, and I mean, it's very unsettling as an investor. It's unsettling as a citizen of the United States, honestly. Like Trump tariffs, I've been the whole time like mentioned. I'm very anti-tariff. If you're using them as a negotiating tool or like very selectively and targeted, but that's not what's happening here. So yeah, it's anything but. Well, I know he's being sarcastic, but it's anything but fun.
Yeah, I agree. Sorry, I was just I was reading the comments, and then like you also have so tariffs is definitely one side of that coin, and then you also have this escalating tension around this Ukraine situation with what we're seeing coming out of Europe and the UK and even Canada to some degree, even though the guy's on his last week in office and he's like making more commitments, which is ridiculous. Don't get me started.
It's horrible.
But then on the other side, Trump is escalating the rhetoric around like him using stronger and stronger words and terms for Zelensky, and so I think that also adds another layer of uncertainty. So you have the economic uncertainty with regards to tariffs and how that's going to potentially impact inflation and obviously hurt the market and just hurt everybody in the U.S. itself and have a sort of negative impact. But then you also have this increasing tension around this idea that, hey, like we're going to sit down at the table and we're going to sign a peace deal and it's going to be done within 24 hours after I'm elected. Obviously, that's not true, but we're actually seeing it now go the other way around, where like because the U.S. is like threatening to pull out funding and distancing themselves, other countries are now doubling down on that commitment, and it just like that also has more uncertainty.
Some good comments too, by the way. Robinhood Weekly is following this. It's an hour and a half after we started here, so we'll have to stop before then. We'll try to get to comments as always. Towards the end, there's some other. This is a lot of macro, and then we're also going to talk some Tesla too tonight for sure. But let me throw up like these few things to you. So this is part of the equation. PMI came out on Monday, and this is prime manufacturing. It was below where it was expected, but kind of shows where we are historically. Like it's not terrible, but below expectations. With what's happening here, Atlanta Fed GDP now came out. This is a GDP estimate for 2025, and it's very much revised down negative. I believe it was negative. Oh, I don't see it here. 2.6, I think, which is not great. As a reminder, 2.8. As a reminder, let me reshare I didn't share my whole window. My apologies, guys. All right. So yeah, here this revision is 2.8. Atlanta Fed now GDP. Negative GDP is not what we want to see. It's not as bad as it seems. Like it's pretty bad, but I thought that this was very good. This is showing basically a lot of companies are importing massively over the short term just because of the tariffs. They want to get in ahead of that. And that actually makes their trade balance look a lot worse than it is. Between that and between government really kind of, I wouldn't say really, but somewhat cracking down on spending and cutting, like both of those impact GDP. But is that like the whole story of the negative GDP? No, but that's a good part of it. So like that part didn't scare me too much, and if that was all we got, like, okay, PMI comes back soft, GDP now, 10 years doing what it's doing. It's like, okay, fine. But it's the eccentricity and the erratic nature of like everything that's happening within the United States right now is like, man, it's not good for the government. And the Kobayashi letter, kind of went through and talked about a lot of these things as far as a timeline. And the big shift was like, of course, there was this announcement. Maybe we'll talk about this too. TSM, $100 billion investment in the United States. That's cool. And then the comments were like, yeah, massive tariffs. So not amazing.
So I want to throw up two things on screen because this is all from our DMs that we've shared, like, just the topics that we want to cover on the show tonight. And, one of them is this idea that as a result of having a very active president. So I think one of the things that we both agree on is like, hey, he's way more active than Biden. I think everybody here, for better or for worse, right? He's just doing more actions in a more consistent basis. Now, we don't really know what the repercussions of those actions will be, positive or negative. But, this was something that I saw today. It basically is a list of all of the commitments from different companies. And it's like, like $2 trillion almost, well over $1 trillion. Yeah, almost two, in terms of commitments from different companies, from different countries, just entities in general, and then the other side of it is, well, of course, with tariffs, you're going to have a situation where you are all of a sudden starting this like tit for tat, escalation, right? Like one of the things that I saw that I sent to Roy was this, where now Ontario is going to stop nickel shipments to the US. And then obviously people are commenting like, oh, what do we need nickel for? We don't need nickel, blah blah blah. And the point is that it's still going to be affecting the country, because they now have to like think through those supply chains. They are going to have disruption in their day-to-day production. And then even if they can ramp up domestic production, like I saw the tariffs on agriculture, right? That one was the big, announcement that I think sent the market further down. Like even if, okay, so first order, can you ramp up domestic production to meet the current demand so that it's status quo and you essentially do what the tariffs are intended to do?
Not this fast. You can't do it this fast.
Even if you can do it, you can't do it that fast. And so that's going to be the short-term pain, even though in the long term you might have gain. But that's like a question mark around that. Same with nickel, right? Like it's going to be very important, for batteries, for the rockets in general, like turbines, generators, everything that you use steel for, essentially. So all of these things are going to have real tangible impacts in the economy, because you now have to have a short-term reaction of like, oh shit, how are we going to cover the problems that we have so that we can have minimal downtime in our production line? But then you have to have the medium and long-term situation figured out. How are we going to ramp up domestic production to make sure we can meet these same needs at those same margins without increasing the prices to our end consumers too much? Because everybody else is going to also put reciprocal tariffs on the US. So it's kind of like, it's going to get pretty messy, I think.
Yeah, and that's the thing. Like the agricultural tariffs are one of those things. It's like it doesn't make sense. Like I think tariffs largely don't make sense, but we import some things. We import agriculture for sure. A lot of it from Mexico, but usually those are things that either because of seasonality or just like avocados that we just don't grow nearly enough of to meet the demand here. You slap tariffs on that, there's going to be retaliatory tariffs. And guess what? The United States is a net exporter, not importer, exporter of agricultural products. It's a meaningful part of farmers' income. And him saying, and somebody quoted it right there, like, have fun to farmers, like, either he doesn't understand that, like, we're net exporters. And when you put up tariff walls like this, you're doing damage to the American farmer. Yeah, there's some mega farming corporations, but there's still a number of family farmers out there that are absolutely going to get wrecked, crushed. They may end up not being able to grow crops at all, period. I mean, that's a little extreme, but they're going to really get hurt through this. And it hurts real people, especially when you do it this fast. It's absolutely ridiculous. It's irresponsible.
Well, that's the thing, right? Because these countries are not going to just sit around and get tariffed. Like immediately they're going to have retaliatory tariffs. And like it's going to happen with China, because now he increased the tariffs on China. It's going to happen with all the countries that he's doing reciprocal tariffs.
Did you see this? The Warren Buffett quote? You were working all day, so maybe not.
No.
Okay, react to this. So he went on CNBC, maybe might have been CBS. Anyway, he said punitive duties could trigger inflation and hurt consumers. Tariffs are actually, we've had a lot of experience with them. they're an act of war to some degree, says Buffett.
Yeah.
Over time, they're a tax on goods. I mean, the tooth fairy doesn't pay them. And then what? You have to ask that question in economics. You always say, and then what? And that's the thing is, like, there's second, third, and fourth order effects from these sort of things that there's no way they're being considered. There's no way. Not this aggressive, not this fast.
Yeah.
It is a form of economic warfare. What do you think?
I absolutely agree. Like, again, I think we just highlighted a couple of the main drawbacks, and they're all short-term drawbacks that you're going to face a lot of pain. Like, people are going to be on board with tariffs, but then you go to the grocery store and you see like $80 for a carton of eggs, and you're like, what the fuck is going on? Like, what is happening here? It's just going to be completely unfeasible. And so, like, I also see them, I mean, when you extrapolate them, and maybe this is the wrong take, but I see them like almost akin to economic sanctions, because like sanctions will like absolutely say no to that product where you just are not importing it at all. But if you raise the price enough, you're basically pricing it out of the market. So it's like, no, not even worth importing in the first place.
And of course, this is hurting everything in the market right now, but Tesla in particular, Elon Musk is, I think rightfully, because of his place with Doge and also helping get Trump elected, is seen as Trump's one of the key people in the Trump administration. And so retaliatory tariffs, just like we saw with Canada, are likely going to target Tesla even more so. So with this going up, that was my fear with EU tariffs in particular. Like, they're already not doing well with EU cells, and I can't imagine the EU is going to be like, oh, 25% tariffs, cool beans, that's great.
Yeah.
No, retaliatory tariffs, and especially punitive, very likely towards Teslas.
Yeah, absolutely.
Now, they do manufacture many of those in Giga Berlin, so there's probably a way to skirt, like it's in the EU, so like there's only so much that they can do, but like, man, it's not good. So it makes it really hard to buy this dip, just because I'm like, okay, well, if he keeps governing this way, and I see no reason why he wouldn't, like long term, there's some good things that come out of it, but short term, ooh.
Yeah.
And one of those things that's pretty interesting. Let me pull up Trueflation here.
Yeah.
Trueflation, I don't really trust, as far as like the headline number or anything, but it is pretty good at spotting trends. And you see this right here?
Yeah, just off a cliff.
Let's zoom in. The 1 month from 2.26 to 1.4. Let's zoom in 1 week. Okay, well, yeah, that's a little bit of a decline. And they had a great post on this as far as like the whys in the house.
So let me ask you about this, Roy, because if you see this number going down, doesn't that push the Fed to have more rate cuts?
Well, yes, but the problem is that this is using real-time numbers, their algorithm, and I don't like fully trust it, but I mean, to be fair, I don't also fully trust CPI.
I mean, the chain of logic that I'm following is, if you have more tariffs and people are priced out of buying goods and services and they spend less money, inflation will go down. And if inflation is one of the main metrics that the Fed is now using to control rates. And so one of the silver linings could be that the Fed cuts more than 2 times this year.
Yeah. And so Matt asked a question right here, and rather than get to it later, he says, I'm curious if either of you believe we're headed towards stagflation. There's nowhere really to hide it in the environment. Stagflation requires a stagnant economy, which I don't think we really have. We have an uncertain economy. There's a lot of manufacturing that is shifting to the United States. Like long-term, things are fine. Inflation, like tariffs will over time absolutely impact inflation negatively. Like they do, but they take, well, it's kind of tough because these are very aggressive. But typically tariffs, when they're applied, take about 2 years or so, depending on what kind of tariffs, who they are on, and what research you read, to be fully priced in, kind of like rate cuts. That when you first cut rates, it doesn't have, like, the market will react to that immediately, but actual companies, they won't react like that day and be like, all right, now it's go time or anything. It takes, usually like 13 to 24 months for the full weight of that cut or raise to be really factored in. So tariffs are a lot like that. So I don't think, I think that there's probably more deflationary pressures than inflationary. At worst, I think that we'll probably be at this same, and I wouldn't like, I don't think we're gonna get a one handle on inflation. Like, unless we actually go into a real recession, then maybe. And that would really not excite me at all. It's like, yay, inflation's down, but at what cost? Like, that's terrible. So, I don't think stagflation is what's happening. We could have a stagnant economy for a little while, though.
My answer would be very similar, simply because I still trust in the fact, and maybe this is blind trust at this point, but I still trust in the fact that in that delta, the lag time from now and until when that effect of that tariff is felt, that they can walk this back a million times, or at least change their stance. And it really, I still do view it as very much like a negotiating tool, where I don't think they're going to keep, I don't think they can afford, quite frankly, to keep 25% tariffs or 50% tariffs on anything for a period over 3 months. Like, they're going to be walking it back. They're going to be reaching deals. They're going to be on a case by case basis. Like, I wouldn't be surprised if Xi comes to the table, or if whoever comes to the table, the EU comes to the table, and they say, hey, look, let's work out a deal, what me and you can do. And as a result, the EU is going to lower their tariffs on the US, and the US is like, great, like, we'll lower ours on you as well. And so they get something out of nothing, but they can only do that if they lead, with the stick and not the carrot. And so I think that is still, like, obviously the market is going to feel that short-term pain because of the uncertainty, and B, the fact that it's forward-looking. But that doesn't necessarily mean that these tariffs will actually go into effect and the end consumer will feel them, because literally look at the math, right? Like, even with Canada, he's pushed it back like twice already. With what was that country that refused to take the migrants back?
Colombia.
With Colombia, I mean, he did it immediately. Within a couple of hours, he got what he wanted, and he was like, okay, no, never mind. And so my point is like, just as quickly as they're put on, they can be put off. And I do think that other countries will have that same pressure, have that same internal panic that we're feeling right now, and they will come to the table. That's like the glass half full perspective.
So let's talk more about that too. Can you throw up all in always from 7:30 comment?
Yes, I can. 7:30.
Yeah, I think that this is the bull case. Like, if things work out well, so hypothetically, we have no guarantees, we have no likelihood, we don't know whether this will happen. I would say there's probably like a 55% chance of that happening, but like, that's not credible enough to actually bet on for myself. But like, let's say that, just like you were saying, Tevis, and just like this comment, that there's a shock, leads to actual negotiation, tariff walls are actually taken down, then there's actually more trade between Canada, Mexico, EU, like, and at the same time, inflation takes a hit from some of this, and we also have the 10-year coming down, which actually helps the mortgage market, real estate, and that's a big part of our economy. It's like, wow, that's really great, but that doesn't turn on a dime. Like, yeah, the market might pump, but the actual economy, it'll take a while. And as any CEO, any person running a business that's making long-term decisions, they're going to want to wait in this kind of environment. Like, most of them, just because it's like, okay, Trump says one thing, and then like 2 weeks later, it's completely different. There's no certainty. How can you make long-term capital allocation plans? But yeah, it's like that. That's a silver lining. Like, if those things happen, and I'd say just slightly, it's basically a coin flip of whether it does or not. Yeah, that's good. That's very good.
I mean, you better believe that his administration is definitely facing some pressure. The moment you see the market, falling so drastically in a period of a week or 2 weeks, like, he's not just shooting. I don't know this. I hope I think he's not just shooting from the hip, that he has economic advisors saying, hey, look, these are the stress levels. These are the thresholds of, if we do go through with this, what can we, get away with? And I think he's, bluffing and playing that poker hand as best as he can. But again, we don't know for sure. And they could be on for a much longer period of time, and we could really feel that pain, and this dump could just be the beginning of more pain. So I want to be intellectually honest to both sides of that coin. But from what we've seen in the past, over the past couple of months since he's been, over the past couple of months since he's been elected, he has rolled back tariffs that he has put on in like 48-hour turnaround.
So put up a light. Yeah, I mean, I don't think so. No, I don't think that this is enough to even plunge us in a bear market, but it could be the beginning of a lot of stuff. So put up Elijah's comment. What's the Trump bear case? 734. So the bear case, like the absolute worst bear case, basically is that there's retaliatory, not reciprocal, but retaliatory tariffs. And so it goes from 25% to higher, like 50, 100. I mean, you can go higher than 100% tariffs. It cracks the global economy, sends pretty much every country into recession. And other countries are so upset by what the United States basically did. I mean, it's whether you say, hey, it's warranted to try to use it as a negotiation tactic, but if it goes to that point, and it is, you know, I think Buffett's right at that point, like it is economic warfare that may, and there's a lot of diplomatic stuff like that's happening with NATO and the EU and the United States. It just, and can't, like you can see the way that Canada thinks the United States right now. It wouldn't shock me in that environment. Now, I think it's a low probability, but that we see a lot of countries around the world really going away from the dollar to something else. Now, that's something else. It's hard for me to think of that being the euro or BRICS. Like those are just not great alternatives, but they'll find something at that point. And I think it's very unlikely. I think that's like less than a 10% chance, but that would cause massive ramifications. That's one of the reasons why, you know, we've been able to print so much money. That's one of the reasons why the United States is just kind of advantaged is the petrodollar. Like the more people that are on the US dollar and using it, that's a great thing for our country. And we can print money, and then that part of the price of inflation is really exported to those that are holding dollars that are not American citizens.
Yeah. Yeah. Kroger's board just terminated the CEO because outside actions were unconducive. Okay. I don't know. But I'm just throwing up comments. There's a lot to get through. How is this not a bear market? Is a bear market 20% peak to trough, I think?
Yeah, from the peak to the trough, once you hit 20%, somewhere like over 20%, so 20.001, whatever, then that's a bear market. And then crash is 30% or more. Extremely unlikely that this gets us anywhere close to a crash. This isn't likely to put us into a bear market either. Corrections, which are 10% territory, that's on the table. We're not. Well, let me look at the NASDAQ, actually. We might be at correction territory on the NASDAQ.
I mean, definitely getting close to it. Overnight markets are very red still.
Well, kind of. NASDAQ is actually up 0.43% overnight. So yay. Let's find that peak. Yeah, it's down 7.85%. So it's bad. Yeah. But yeah, the SPY has more to give. Let's find that peak. I'm sure there's a tool out there that does peak to trough too, but yeah, that's about 5%. Can never remember. All right. Yeah, peak was way back here. So poor Russell 2000. Yeah, it's negative 14%. That's tough. And Dow. I think Dow is also, here's
you just go year to date, dude. Or I guess peak to trough.
Yeah, it's only down 4%. That's not bad. So, yeah, Dow really got hit today hard, though. Just, I mean, a lot of the companies that are in the Dow Jones are major producers. Like the PMI hurt them, of course, and then PPI, and ended up, of course, tariffs really hurt them too. So,
do we want to go to this? I saw this today, and I'm curious to get your thoughts. Xi prepares to unveil China stimulus plan as trade war heats up. China prepares the money printer, baby. I mean, we could see it in the States as well. I'm not saying that's good for the economy, but it will be good for the stock market because that extra money has to find a home and will pump up equities like it has in 2020, like it has after the great financial crisis, and so forth. So, I mean, this is how China is going to be dealing with with the trade war, but they have a slightly different form of government over there than the States. Roy, what are your thoughts?
I mean, I don't think this necessarily has anything. It has a little bit to do with trade wars. Like tariffs hurt China a lot.
Yeah.
But if this is economic warfare, which I think Buffett is right, everybody loses in war. Everybody. Now, somebody might lose less and be like, "Hey, I won. This is awesome." But it's if China's economy cracks, that's bad for the world. That's really bad. And they, even without the tariffs coming up, they're going to do some more stimulus anyway. Their economy is sluggish and hurting. There's a lot of issues in China. Now, for those that are holding Chinese equities, it's probably going to be a bit of a pump, which there usually is, and then a fade after that. So,
yeah.
But I mean, like I think the Chinese indices are actually up more than the United States this year. So, if people are holding that, I don't personally, I wouldn't, but congrats if you're holding it.
Yes, absolutely.
It does feel like that, yeah.
Tevis, do you think Elon being first buddy is a good thing for Trump? I mean, look, I think it's a good thing for Trump. I think it's a bad thing for Elon because it takes away attention, it takes away time, and it hurts his own reputation because now you have all these people who are against Trump have a very easy outlet to also now be against Elon just by association. But obviously, it helps Trump because if the guy has 400 or 300 billion dollars or whatever he has in personal net worth, like he's achieved that by building multiple multi-billion dollar businesses. So he's proven unequivocally that he can be very successful from a cost effectiveness perspective, organizational perspective. And so like obviously that's good for Trump's administration because it adds a layer of efficiency and a layer of actual getting shit done. It's just not good for Elon himself.
Yeah, I agree with that completely. Do you want to talk about Tesla a little bit?
I do, but before we talk about Tesla, I would love to also share with you something that I saw. I don't have the post here, but I saw it earlier today that there's basically a little rumor going around that on Friday in that crypto summit, they're going to be, well, I don't think this is going to happen. Let me preface with this, but the rumor was that they could be introducing no tax on crypto. Oh, what do you think about that, Roy? Well, first of all, what do you allocate as a percentage chance of it actually happening and being dropped on Friday? And then what do you think about it?
I think it's dumb.
Okay.
It should be taxed. If you're going to tax equities, tax crypto the same way. It makes sense. Doing otherwise, I don't know. It makes like if you're doing away with or you're changing or you're reducing capital gains tax, fine. I don't think that there should be as much of a distinction between short-term and long-term capital gains. And so if you want to change both, like I'm in favor of that. That's good. But yeah, like it's going to hurt equities like even more. People will be pulling out maybe and putting money into crypto. Yeah, that's good for a lot of names that I hold, but like I think it's a dumb idea. And I don't know, probably 10% chance, even though it's dumb.
That's fair. I would be aligned with that, saying 10% chance. I don't think it's going to happen, quite frankly, because exactly what Roy said, like, how can they do it on crypto? The first question that people are going to ask is, what about equities? And then the second thing that they're going to ask is, okay, so let me just sell my entire, portfolio and just go into Bitcoin because I can just arbitrage the difference with the tax savings that I have because I have no capital gains over here.
Yeah, put up Zokold's comment, that first one, no tax on capital gain investments. I know it's laughing emojis, but like
we take the risk.
They honestly, like, we have so much debt and deficit. I don't think that should happen now, but like eventually, like much lower tax. Yes, that would be amazing. Not just because I'm invested, certainly because I'm invested, but there's such a gulf between short-term and long-term capital gains tax, and I don't think that makes any sense. I don't think that's helpful. Certainly to investors, like the United States government makes more tax revenue, but yeah. But if they're going to do something like that with crypto, like, hey, no capital gains tax at all on it, then do it on equities too.
Yeah.
That would be less
Mhm.
bad. I just don't think it's the right time for that.
Yeah, exactly. I don't disagree with having it on both. Like at the same time, if you think, and yes, I will get to Sofi in just a second here, but like if you work through mentally what the repercussions of no capital gains tax would be, people are going to have a surplus and they're either going to reinvest that surplus, in which case it's going to pump up all of our bags collectively, or they're going to pull out that money and they're going to spend it in the economy. They're going to buy more stuff with it, in which case it's going to stimulate the economy more. I would argue that from what we've seen with Doge, that the tax dollars that are collected in the first place through capital gains are so inefficiently spent and distributed in projects around the world that you'd be better off just distributing it back to the people with zero tax on capital gains and letting the chips fall where they may. If I want to double down on my investments, then I can do that. And if I want to pull it out and buy a Lambo and a house, a mansion, great, because that tax dollar has a better opportunity cost stimulating the economy than it has in the government's coffers. Now, if the government was truly efficient, then absolutely tax it. But I don't think they are.
Yeah. By the way, so the crypto summit is coming up this week. I believe it's on Thursday. Correct me if I'm wrong. David
Friday.
Sachs, of course, is the
I believe
crypto
Friday.
czar. Now he mentioned that he had already divested and sold all of his personally owned crypto. Now there are some crypto projects that he's in and invested in that he can't just do that, but I appreciate him doing that. And he'll still make money off of whatever. But if during the crypto summit, and we already talked about this yesterday, long post, a lot more bullish time 24 hours ago.
Yeah. It was a
If the
different
Trump
time
coin is
in the market.
mentioned as part of the strategic reserve, I'm going to be so freaking angry. So angry. Like, even if it's a 0.001%, it's like, no. Like, I'm a Cardona. I own ADA, Cardano.
Yeah.
I don't know that Cardano should be in there. XRP, I don't think so.
Yeah.
Ethereum, probably not. Bitcoin, yeah. But if it's like 95% Bitcoin and then the rest that's fine. That's whatever. But man, do you think that the Trump coin is going to be in that strategic reserve of crypto?
I think having Trump coin in there opens the door for a lot of legislate or a lot of like legal repercussions because he personally profits from investments that would be purchased with tax dollars. And so, Roy, you work a job, and a portion of that money from that job is going to get taxed, and Trump buys his own bags with that tax dollar. Like, I think that's a very clear grounds for some type of manipulation or fraud or whatever it may be. So I just think that's like a hornet's nest, waiting to be poked.
Yeah, it's such a mess. Oh man, it's even a possibility. Like 3 months ago, we'd be like, hey, there's going to be a crypto summit in the future, and they're going to talk about a strategic reserve. It's awesome. We would not think the president would have his own meme coin, and that it would be possible that it's included. But man, things can change fast, especially under this administration. So
Yeah, I like this idea.
that's awesome. I love that. That actually makes a ton of sense.
Yeah. All right. Where do you want to go? I'll let you drive.
Let's do the Elon Musk comments of 1,000%. Let me pull up that message just so people can see the context, because the context is really important here.
Yeah, a lot of people just defaulted to like market cap, and that's not. But anyways.
Yeah, and my mind went there too. Honestly, I didn't retweet it like you did.
Well, yeah,
but
I made
I
a
would have
post
said the
about it.
exact same thing as you. So,
Well, I wasn't talking about market cap. I was just talking about the like actual because he was responding in a thread. Anyways, you can put up.
Why can't I find this? Okay.
It doesn't feel like a Monday to me. I don't know. Maybe it's the fact that we went live yesterday and talked about the market, but it definitely doesn't feel
Yeah,
like
it was yesterday. Here we go. So it will require outstanding execution, but I think more than like 1,000% gain for Tesla in 5 years is possible.
Yeah.
And this is profit growth by John here that he's noting it, and 258% in the next 5 years is what he was noting for Tesla. And so this isn't market cap that would be utterly ridiculous and impossible. And I think I commented such because I just got it wrong. I misunderstood that, but Farzad. I mean, so is how likely do you think this is? How possible do you think this is? Not for market cap, of course, but for actual profit growth.
Also, a couple things, right? Like you have to, number one, keep in mind that start the way I started off is thinking about what product lines are going to be operational in that time frame. And my post around this was, I don't think 5 years is feasible. I think closer to 10 years because Optimus will not have reached any critical mass or tipping point in 5 years. And so the only thing that we're going to be relying on, bless you, is going to be the actual FSD or Robotaxi. Now, the flip side is that the take rate on FSD is massive. It's like all margin essentially, and Robotaxi has a really strong potential, but they would need to ramp it up really drastically in order to achieve that. Number one. Number two, I think that they can internally try to increase or optimize the margins on the core auto business to try to reach that. But it's like, I think if I had to assign a percentage to it, I'd be like 10% or less, honestly. In 10 years, it would be much higher.
Yeah, I think it's gonna be tough, especially in the middle of a tariff and trade war, unless all those go away. And even without that, it would still be very tough unless they like really went on automation and begin shipping Optimus much earlier. Well, I guess there's the Model 2. That's not what we're calling it, I don't think. But I don't know. We'll see. But I think Tesla will do okay, but this is not the environment for that. Man, there's a lot of bearish things in Tesla. Like the biggest thing is, retaliatory measures towards Tesla, and there's a lot of people that just won't buy the product at all because of association with Elon Musk, who's associated with Trump. Whether that's rational or not doesn't matter. Like people are doing that, yet it's still an amazing product. Like today, regarding Tesla, I dropped off my Tesla. As you guys probably mostly know, I ended up getting a fender bender with my Tesla. Entirely my fault. First wreck that was my fault since I was 21. And back then I was just blamed. It wasn't me. So this time I was like, yep, my bad. Thankfully, no one was hurt. Car needs to be repaired. And so the nice thing about Tesla insurance, there's some downsides, but is you get, if you have rental insurance on there as well, you get a Tesla as well from Hertz. So I was there. It was a long wait, but I was talking to one of the workers while I was waiting to get my Tesla. And I asked, I was like, well, is there any way I can get a Model Y? Because I know you guys usually have Ys as well as 3s, and I'd love to try that out. And they said, technically we do. And it's like, okay, like, can you tell me what that means? And they said, well, the way it works is this, that we have managers that are here. And one of the perks of working here as a manager is you get to pick and use, for your own personal use, whatever car that you want on the lot. And all of the managers, more than any other car here, love, guess what car, Tevis?
Tesla.
The Tesla Model Y. And this isn't the refresh version. This is the probably 2022 version that's, a little outdated and everything. But it's such an incredible car versus like, they also had on the lot, I guess it's being rented out right now, like the Silverado that's an EV that gets 475-mile range. And she's like, yeah, it's a fun car, but it like takes 2 hours to charge up on a supercharger. It's not designed nearly in the same way. But yeah, it was that was exciting to me, just to like hear another confirmation of like, these guys have a whole range of vehicles that they can pick from. And they're just all about that Model Y for Tesla. And that's before the refresh.
You guys want to hear a little fun Tevis trivia fact? I think you guys are gonna get a kick out of this. I actually crashed my driving instructor's car in driving school.
Ooh.
Now, I will say it was not my fault. We got rear-ended, but I did tap on the brakes pretty hard, which was it's quite funny in retrospect, but definitely not when it happened. Yeah, no wonder Tevis wants FSD so bad.
Yeah, I mean, FSD is incredible. I think especially in hardware 4 cars, which I don't know, and it's hardware 3. But there's actually a chance that our car gets totaled, even though it's pretty minor. But that's just what we've been told by the repair place, that it's pretty close to the amount that they can do it for. So we'll have to see if that's the case. We'll have to figure something out, because it's like I really want the refreshed Y, but man, they got a lot of discounts on the older Y. And I can always install an aftermarket screen on the back if I want to. Vented seats, I'll miss out on that. I like the refresh, but hey, we'll see.
Oh my god, this is totally worse, Jim.
Oh my goodness.
Okay, let's see. Holy crap, these comments are coming in quick.
So Kirby mentioned this. Go ahead and throw up my screen if you don't mind. Bitcoin. So yeah, it's down even more today. Like it actually bounced slightly. Boy, where does it think I am? Oh, UTC time. Okay. But yeah, I actually hit 80 below 83,000. And just like look at the volatility of this. Like, yeah, we were down lower here on February 28th, pumped up to 90, almost 5,000, and it's down 11% in like a day. So
yeah,
it's Bitcoin. It's volatile. Stocks have done this too. Robinhood is actually greater. Like, how you liking being a Hood shareholder?
I mean, I kind of felt bad in the morning, and I almost messaged Kelly because I was I saw the market at 9:30, and Robinhood was up like 10% or whatever, and Hims was down 1%, and I almost messaged Kelly being like sorry, but then I just got caught up and got in meetings. And by the time I left the meetings, it was like 3:49 or something, right before the market closed, and they were both down significantly. And I was like, oh, well, that would have been preemptive because it was a massive swing today.
Yeah, and yeah, the Robinhood like peak to trough over 14%. It's crazy. It was so exciting and bullish with the news last night, and then with all this uncertainty, the market does not like it, and so it sold things off. Sal has a good comment too, and maybe we'll get to the comments here.
I will. There's questions that I'm bookmarking. So guys, don't worry if you guys ask a good question. I will try to bookmark it, and I will try to talk about Sofi as well for a little bit before we go into the questions.
So how about we run an ad, and then we'll get into questions.
Sure, sounds good. Okay.
I just realized I might have ads. If you guys, by the way, are on my stream, you've got an ad before this, let me know. I may have set up this wrong. I don't mean to double down on ads, and so let me know, because I'll make sure that I change it in the future. I have 2 streams, so it looks like I may have done that wrong. So
yeah, Brave is legit. I like Brave.
Yeah.
Okay. What was I going to put? Yeah. So first of all, I want to put up this. How do we even expect Robotaxi to operate properly? People are going to trash those vehicles within weeks. I think Tesla absolutely won't be able to run it unless Elon takes a complete U-turn. So I don't think it's going to be that drastic. And here's why. You're going to have your credit card literally on the app. They have cameras all around the car and inside the car as well. And you're going to sign a waiver or even just agree to all the terms and conditions before you can even have access to this app, that if anything happens, it's going to be taken out of your credit card, and they have all the footage there already. So I wouldn't be too worried about that problem. That's a relatively small problem to solve from a liability perspective. Because right now, they're worrying about bigger problems. They're worrying about how are we going to take deliveries if you want to do an Uber Eats with a Robotaxi? What is that? How are you going to open the door and stuff like that? But in terms of trashing the car, you have your same with a hotel room, man, right? You have your credit card on file. Roy?
Yeah. No, I think that maybe what he's wondering about is we saw like a headline today where there was, I think it was not from a day ago, but maybe last week,
Yeah.
where over in Europe, was it France? It might have been France. There were 12 Teslas that were torched at a Tesla. They use the word dealership because they don't know what to call a Tesla location, but
Yeah.
and like it just seems like that just very targeted towards Elon Musk and Tesla. And so I think we saw some of this with Waymo and with Cruise happening,
Yeah.
where people do stupid stuff and just be even without the Elon Musk factor, like they're like, oh man, you're taking away people's jobs, or they're just like, hey, this will be fun to trash. We'll have to see how commonplace that is. Like it could become. I don't think that it'd become enough of a problem, like especially with all the sensors and everything that's on that vehicle. But there's going to be some of that for sure, where just random people that are not passengers are like throwing bricks and stuff at or like destroying the tires, or like just being stupid vandalism stuff.
Yeah. Yeah. And again, same thing, right? Like they have cameras and they're going to pursue legal action. Tesla already said as much. And it's just one of like it's straight up vandalism, right? Like so I wouldn't, be too concerned about that. Obviously, it's not a great look, but it's also nothing that's going to like drown their entire FS or Robotaxi business.
Yeah. Sentry mode's a great thing.
Yes.
On the Tesla. Necessary. If you guys are using Tesla, if you're not like in a rural, very safe location, and even then, like I was in a pretty rural location about 7 years ago, and where we lived and everything. And one of the kids in the neighborhood that we knew and we've been really nice to keyed our van, and it was like, come on,
Yeah.
just because
People are getting row ads. I love that.
Man. Okay, no more ads. We don't want to feed the competition at all.
Yeah. Oh man, I wish I could bring some of these comments up, but I don't think I'm brave enough. You guys think the insurance companies will sign off on a robotaxi service? No way. The liability is through the roof. Tesla insurance is going to be covering the robotaxis, guys.
Yep.
So
yeah, and I'm sure that they're going to expand their insurance product out to more states. I haven't seen any announcements on that, but they're starting out in states where they have insurance, which is California and Texas. So
yeah. Do we want to just talk about Sofi very briefly?
Sure.
And guys, we will talk about Sofi on the Sofi Weekly this week. It might be on a different day this week, maybe not Friday, maybe Saturday. So just bear with us. It was my fault, this time around of why the day has changed. But we will definitely talk about Sofi. This was the news that came out today around Sofi, and we'll spend a minute on it. $698 million securitization of loan platform business, 35 unique investors. Sofi posted about this earlier today. I was literally 4 hours late to getting around to this news, but very, very bullish news for the loan platform business. Obviously, we know that part of the business is going to be, kicking off and accelerating and contributing to a lot of growth for Sofi. So that's obviously very bullish. The fact that the stock is, 1350, I think is a byproduct of the market and the macro as a whole. But the fact that the business is executing internally, this is the signal that you should be looking out for.
Yeah, the loan platform business is very, very bullish.
Yeah.
And what's happening as far as macro stuff, I know Sofi stock is not doing well, but it leads to a very high likelihood of more rate cuts. Now, as long as there's not an actual recession where people are losing jobs, that's freaking fantastic for Sofi. So, I'm not changing anything with Sofi. I'm just taking on the chin right now. And we're all Sofi, or not all, but I expect a lot of you are Sofi shareholders. This is nothing new. There is an article coming out tomorrow that Esteban wrote on Seeking Alpha, and it is not uniformly bullish on Sofi. There's a bear scenario that he put out there. He's actually less bullish on Sofi now than he was previous quarters. So he's basically downgrading from extreme bullish to just bullish. He's actually more bullish on Block right now.
He's more bullish on Block than he is on SoFi. That is very interesting news for sure,
Yeah.
man.
And I heard some of the points, that he's going to put in the article, and they're valid. They're all things that we've talked about before. I think, I don't know, maybe we'll talk about that on SoFi Weekly, but I'm not shifted my viewpoint on SoFi after the earnings call, other than just saying, hey, loan platform business, man, that is absolutely where it's at, especially over the next couple of years. Tech platform, it exists.
Yeah, absolutely. And again, it doesn't need to be more than that. Like last week or the last 2 weeks, we haven't really had significant SoFi news enough for us to carry an entire 1 hour discussion about it. And I don't think this news is going to carry a 1 hour discussion about it either. But it's still good because directionally they're proving out the fact that they're executing on their plan that they laid out in the guidance. So very, very bullish from that perspective. I think at some point or another this week, I will get around to SoFi video, but let's see how the week goes. Okay. Where do you think SoFi goes, Roy? Like it's at 13.50 right now. Where do you think it's going?
The easy answer is $11.
You think it hits 11?
You remember that price target, right?
I do. Yeah. People praised you for that freaking price target. They praised you.
Yeah.
Now, if you say $11, you're a freaking bear, bro.
Yeah, I'm joking. I don't know. It's hard to say. Like, that's the thing is, it's tough to say where we go just because it's so macro driven, and the macro changes every single day. It's absolutely erratic. It's like, if any of you guys garden at all, it's like you're beginning of the year and you're like, hey, maybe I'll plant. And then it snows and it's ice. And then the next day it's 90 degrees. You're like, okay, great. Maybe I'll plant tomorrow. And then it snows. You're like, okay. And then it's 90 degrees. It's like, you cannot make plans in that kind of environment. You cannot plant things for the long-term future. And it's hurting pretty much everything in the equity market. Lemonade, I guess, is the exception.
Do we? Well, I mean, when life gives you lemons.
We should invite him, and you can keep talking with him once I have. Well, no, he's got Robinhood Weekly too. So
do we invite this primo nerd? He's only an hour and 5 minutes late.
He's so late.
Do you guys think we should invite Tanner? I mean, let me know. Let me know in the chat. Yes.
And you can put a +1 for yes from me. So
let me know in the chat, guys, if you think we should invite Tanner.
Tanner's gonna say buy Nvidia.
And I want Nala and ETF to fucking ban everybody who says yes.
Now, Nvidia is something we hadn't really talked about, and he might be coming on here to talk, but like down almost 9% today, Nvidia. Man, that's especially on a day where TSM is brought over, manufacturing, major manufacturing deal. You wouldn't expect that from Nvidia. It's down below actually where we were with DeepSeek stuff. So I've managed to, I've been investing. I've been DCAing in Nvidia, and right now, I don't mind with Nvidia. Like, I think there's a lot less risk in that company long term. Barring an invasion of Taiwan, which I don't think is likely. So,
and ETF, who is actually a mod, is deleting all the yeses in the chat. Don't do that. I was joking.
Overzealous.
Oh my god. Hey Tanner, how's it going, man?
How's it going, guys?
Hey.
I love whenever I join, it takes away the part that says bootleg with Tevis and Roy, but like it's perfectly framed for a new camera to come in.
Yeah, dude. It's almost like I made this.
It's a good format.
Yeah, Tevis is a good designer.
What's up, Tanner?
Dude, bloodbath. I can't talk about anything positive without people being like, but it's going down 30% or something like this.
Yeah.
What have you guys already covered?
The market. Talked about Tesla. We talked a little bit about SoFi. We talked about tariffs. We talked about a little bit about Ukraine and China, but that's pretty much it.
No Nvidia yet?
No Nvidia yet.
Just started mentioning it. That it was kind of shocking to see it down, almost 9% today. But like everything's down. But like I would have thought, maybe Nvidia would be down like 3-4%, possibly 5%. But man, and like the other part that we're talking about, at least for myself, is right now it feels like things are just so uncertain in the market, just because presidential figure, and you don't know what to expect, which is a double-edged sword. So on one hand, companies can't plan long term because they don't know what's going to happen tomorrow. That's a terrible environment for business. And on the other hand, like with countries with reciprocal or retribution tariffs, like it's economic warfare, like Warren Buffett mentioned in his interview or discussion today. So this is a dip that I'm not really buying. I've sold some cash secured puts on HIMS. I bought some Robinhood because it's a weekly DCA thing, like weekly DCA stuff, Bitcoin. I do that. I'm not changing that. But anything else, I'm like, no, I'm raised a little bit of cash today, and I'm good with that. And hey, maybe we rebound tomorrow. That'd be great. That's fine. But
I said, you know what? I'll buy a decent amount of all my names as a DCA going forward, but every time Nvidia drops 9%, I'm just going to buy that. At 9%, I'm not looking at other names.
Nvidia dropped 9% today. Holy, what the heck?
I just said that. Yeah.
It's insane.
What is going on?
You guys want to see a chart that I just put together?
Chat. Do we want to see a chart that Tanner put together?
Stop chatting.
All right, brought up. What you guys?
Hey, chat.
Hey, chat.
Dude, look at frickin' Apple's PE versus Nvidia's. It is tied.
Well, what's the forward PE in Nvidia right now?
Here, wait. We'll look at that.
So, like, this is one of those things. If the market keeps tanking like this, I took some. I have 10 total holdings, and I deleted one completely, which we've not really talked about, and the other I took some off the table just because I'm like, A, I want more cash, and B, if the dip keeps dipping in some names, I want to certainly add more. PayPal is one of those. Robinhood's one of those. Nvidia is one of those.
Is this all I do? Do you guys never look at any charts on this show?
It's crazy. It's crazy.
Wait. No, bring it back.
Yeah, bring it back.
Keep it up full time. Let's bring in Apple. Okay, Apple. This is next 12 months expected from Wall Street. It brings the multiple down a lot, 31.6x. Let's bring in Nvidia's forward PE. What do you guys think?
This is dumb. It's like 20 something.
What the?
Yeah.
25.4. It'll be cheaper than Apple. Yeah. But if we were to look at the next year after this, it would look ridiculous. And the funny part is like, if you go ahead and then factor in, okay, well, how many times does Apple beat their expectations for earnings? And then how many times does Nvidia beat their expectations for earnings? It's not even close.
So the only reason why people hold, it's not the only reason, but in my mind, like the only reason why people hold Apple is either A, they bought it a long time ago and they just don't want to sell it. And that's Warren Buffett, that's fine, whatever. Or B, it's a flight to safety thing. And they're like, hey, massive cash. It's a safe place to be, safer than Nvidia. And so part of it is, the market is rotating from risk on names. And they see Nvidia that way, which is not accurate, honestly. It's not into Apple, which, yeah, it is safer than Nvidia. But my goodness, like if you want like safety, margin of safety and everything, and you like buybacks, buy freaking PayPal. Don't buy Apple.
Yeah. No, I don't have PayPal right now, but I would absolutely buy PayPal for every dollar that I had in Apple.
I mean, or Nvidia.
Nvidia is easy to buy right here.
Straight up, all your Apple, buy all Nvidia, and you're good to go.
But if you like the stability of a company, I think that there isn't stability in Nvidia. There's opportunities for Nvidia to make less, 1 year than they did the previous year, and I don't really see that for PayPal.
What do you think of this comment, Tanner?
Okay, well, one, Michael Anthony is a You know, he always has the weirdest comments and all of these things. I think the dude's 75 years old. But the fact that they offer a dividend
we're not ageist on this stream, Tanner.
Don't insult our audience.
Exactly. Michael Anthony, we love you.
Yes, you're the best.
No, because he always thinks like an absolute boomer. The fact that they offer a penny isn't a joke. It allows them to actually offer to a much larger range of investors. So dividend investors can then go and pour their money into this company. I was actually sitting down with a Fidelity portfolio manager that said that, and this was like when Nvidia was skyrocketing, 18 months ago, and they said Nvidia is our top value pick. And I was like, value or growth? And they're like, no, it's a value stock.
It is, honestly.
I was like, in what metric is it a value stock? It's growing at 175% per year.
Value investing is not people. I don't know when this shift happened, but it was a while ago. It was actually before COVID. That value investing, people understand it now as like boring companies that are not growing very much that have low multiples. Used to be value investing was about finding companies that were severely undervalued that would outperform in the future, whether they were hyper growth or not. That they didn't care as much about growth, but yeah, Nvidia is a growth and a value stock. Like it's both, and it's hard. Like if I hadn't already started a position in Nvidia, like hypothetically, if I had started a position in Amazon instead and I chose it, I'd probably be better off right now. At this price for Nvidia, I would probably sell out of the Amazon and buy Nvidia. Just be like, okay, it's too attractive.
Look at this. I just want to address Sigig's comment. Look at this beauty around the freaking world. It just gapped up on earnings, and then literally in 3 months. And these were lines that I drew when I made the earnings trade. And then literally 3 months later, just immediately closed the gap back to exactly the same price it was on last earnings.
Yeah, and nice volume shelf there too.
Absolutely crazy from Broadcom. Anyways, sorry, continue.
I'm sure there will be some real, concerns going forward for Nvidia. I just think that the margin of safety is so freaking large. Every concern that people have, they go, oh, well, will they be able to hold up this current growth rate? It's like the market is not anticipating them to hold up this growth rate. Like I think they were at here. Let me. I won't bring it up on screen. Okay, I'll just look at it from my side. Just on the revenue side, they did 114% last year. And next year's forecast from Wall Street is 56%. And then the quarter after that, the year after that, they expect 21% growth. This is not crazy expectations. This is a fall from the sky.
Yeah.
And yet it is still so crazy undervalued. So if they can beat 21% 2027 fiscal 2027 forecast, I mean,
and if Michael's right, if Nvidia falls and the rest of the market's not tanking like this too, like if everything falls like 50%, like it's just like rotate in your highest convictions, I guess. But if Nvidia falls with 75, like I'm going to sell out of a number of positions and just rotate in Nvidia at that point.
It can't. Like, I mean, I don't know. It would be cheaper than Google. It would be the cheapest company in the Mag 7 with 5x all their growth.
I would sell out of Tesla completely and buy.
Yeah. You took the words right out of my mouth. I would sell out of Tesla at that point. Can I ask you guys this? So I put up a poll. Don't look at it, but I put up a poll around when will we be back to all-time highs, and I want to go around the horn around your answers. The options are 1 month or less, 2 to 3 months, 3 to 6 months, more than 6 months. All-time highs on the indices.
You see these shoulders?
Yeah,
I know, Tanner. This is why it's a game. And then I want to tell you what the audience thinks.
I have zero confidence in my answer. Zero. But I would say 6 months.
Yeah. Tanner?
I don't know, man.
Freaking pick one, dude.
I have no clue. I don't even want to. I don't.
We received 93 votes on this poll so far, guys. The top voted answer was more than 6 months with 45% of respondents, and 1 month or less is tied with 3 to 6 months at 24% each. So basically you have a quarter of people here watching who think it's going to be a month or less, obviously. And And then you have people who are like 5 years, more than 6 months until he's out of office. Like, it's just crazy, man. Because we have a couple of days that are red, or let's say a week or 2 weeks that are red. And then people are like, we won't come back in years. It's like, guys, do you remember that we've had rallies in a week where we just make up that entire loss? Like, I don't know. It could be 6+ months, but you'd see a lot more pain before you saw it go back to all-time highs if it's 6+ months, guys.
Yeah, I mean, like I don't think we're going to go into a bear market. A lot more would have to happen for that to occur, but people are rotating away from risk, and I think the market's going to want more certainty about a lot of things before it really hits all-time high, and that's going to take months. Could be wrong. Love to be wrong.
You know what? Yeah, I think once there's a couple days of red and a couple headlines that people think that like the sentiment, like we're just going into a 6 month, 2 year trend. And that doesn't always need to be the case at all. I mean, there can be blips in markets where scares happen and then they're corrected. You think about the last sort of tariff hike on Canada and Mexico lasted all of like 8 hours. So I don't know.
Exactly.
The frustrating thing about this is like it seems self-inflicted, by the president. It's not, like COVID or that one ship got stuck in the Suez Canal or terrorist attacks from Yemen or it's like
the yen trade.
Yeah. It's the president has done this. Maybe it's done tactically, but not tactfully. Strategically, rather, but we'll see. Right.
All right, let's pull apart some of these comments because I know the other two gentlemen have to go to their other podcast without me.
Yeah, super fast mode. Let's do 5 minutes.
Also, Robinhood, we love you.
Yes.
As 3 shareholders of equal weighting, probably. Realistic bottom for SoFi. Roy said 11. I would say we're closer to the bottom than we are away from it.
I don't think we get the single digits.
Yeah, I don't think we get the single digits. I don't think we even get to 11. To be honest with you, but Tanner,
yeah, I'd probably say 11.
Great.
Dude, did you guys talk about the news that came out today?
Yes. It's amazing.
We'll talk about it on Friday. Next question. If big countries can demand to annex smaller countries, what happens to Nvidia GPUs if Taiwan gets annexed by China? Will it kill AI growth? Tanner?
I mean, yeah, Nvidia would get crushed. I just don't know if that'll actually end up happening.
Mm-hmm. Roy?
Same.
Mm-hmm. Tevis, do you think the current administration and the EU have a good working relationship right now? Like I'm a fucking diplomat. The president of the United States will be announcing we're withdrawing from NATO in the near future. Mark my words. I agree with that. I think that will happen. I think relations with Europe are deteriorating, have been deteriorating ever since the inauguration. And I understand both sides of that coin. I think if we had a good working relationship 6 months ago, it's definitely worse now. And that's not necessarily a bad thing if you think that America is going to come out, stronger on the other side of this. Roy, Tanner, anything to add?
Yeah, they asked you for that.
Really bad if we withdraw from NATO. That's terrible. But I don't think that's going to happen either. I think that is a negotiation tactic. There's like no way that and that's not a presidential decision. Like that has to go through Congress. That's not happening.
Yep. What would this the bear thesis mean for SoFi? So we were talking about macro, and we were talking about tariffs, and we were talking about how that affects the market. I think for SoFi, well, they're not going to be really tariff dependent, but their consumers at the end of the day are going to have probably higher risk of like they're going to have more pressure put on them. But I think the flip side of it is that if you get to a situation where you have more rate cuts than you're actually guiding for because of the tariffs, and inflation is like way down because of the tariffs, then you could actually have like a silver lining for SoFi specifically, because SoFi is not like, importing, exporting steel. So
there's a couple of questions I'd have for SoFi in the macro, like what, in tariff events, what do default trends look like? Or what do, capital markets look like on fixed income products if interest rates altogether are the same, but maybe that even goes up because the potential for an American only originated loan might be better than potentially offering your money up to a global market that might have risks from other countries.
Yep.
A tariff is not necessarily impacted if you're in the United States and dealing with United States only specific investments.
Yeah. If it causes recession, it's super bad, though. We'll see. I think it's not going to cripple the company, but it'll hurt the stock a lot.
Yeah. Thoughts on lipstick stocks in a downturn? I don't know what this means. If this is a category that I'm not privy to, or he actually means like.
No, that based on the quotes, but I feel like this is a term that I have heard
lipstick
of.
on a pig type of thing. I don't know.
Yeah,
I have no idea.
No, I'd have to brush up on that. I know that there's it's beauty, but there's like some correlation to that in recession, and I have to look that up again. That's a good idea for further research, though. Thank you. I remember hearing about that like in 2022.
What's your game plan if we actually enter a recession? If we do, we're not going to see it right now. It's going to be like, what is the game plan going to be when we actually feel it in 6 to 9 months minimum?
I have a really boring answer here. Do exactly what I'm doing. Buy and hold, baby.
And I'll rotate from lower conviction to higher conviction. If things are bad enough, maybe I'm 100% Palantir in the future.
Yep. Yeah, if USA pulls out of NATO, the market is going to crash huge, more than in the last 1 to 2 weeks.
Can we watch that video before we go? The grandma, if my grandma had wheels, she would have been a bike.
The cooking channel one?
Yeah.
I mean, if we had a reaction channel, which I've been telling you, that's an amazing video, actually.
It is an amazing video. All right.
The theory that lipstick goes up in a recession, Revlon, Elf. It's a Warren Buffett thing, apparently.
Oh.
Do any of you three own defense stocks? Roy owns Palantir, but other than that, I don't know. I wouldn't be surprised if Tanner owns like some boomer shit. I used to own Raytheon, but I don't anymore.
You wouldn't be dude, I own tech stocks. That's the only thing I own.
And not the largest by market cap defense stock.
Yeah, and not that one.
It means cheap consumer goods that people still purchase in a downturn, like still buying lipstick even though you're nearly broke. No new car, but still getting lipstick. Yeah, I get it. Recession-resistant stocks. Yeah. I like reacting to you guys live. Thank you, June. We love having you here.
Yeah, I get recession-based defense or like defensive stocks, Walmart, McDonald's. Like people are still going to get new clothes. They still have to feed their families. Like that still happens. But yeah, I don't know. I don't really bet on those macro movements. I've never been able to time them well. I think what's best for me is to just bet on technology companies and the fact that more people are going digital. I think that's a super easy bet that goes way past any sort of macro.
Okay. Like 2 more questions really quick, and then you guys got to go. If y'all could have dinner with one CEO, who would it be? Tanner?
I don't know. Come back, pass.
Maybe Alex Karp, but any of the guys that I've interviewed.
That's fair. I don't know who mine would be, honestly. I feel like Toby would be a cool dinner, but I don't know.
Yeah, I don't want anyone too smart. Like I don't even want to talk to Jensen Wong. Just do you. I don't want to talk to you.
Yeah.
But I feel like I could have a good conversation with like Mark Zuckerberg or maybe like Mark Benioff. I think that those ones are the ones that came to mind first.
I feel like Mark Benioff would be like a big drinker, which I feel like I could party with him. Yeah, this answer just wins. Joe Ben Bevert, baby.
Yes. Joby CEO. Honestly, I would love that. I would love to meet the guy.
I would love to interview Mr. Joe Ben if he's watching, or if anybody on Joby's watching. Let's hook that up. I would love my first ever CEO interview to be Mr. Joe Ben Levert. That would be a dream come true. real question: are you selling any of your positions? What would you need to see to sell the positions that you really like? Anything?
I sold out Enphase entirely. I'll have a video or a post on that. It's not because I'm bearish on the company. It's because I want more cash, and I see opportunity in stocks that have a higher conviction, higher certainty of when that'll turn around.
Yeah, you'll see me sell out of more positions soon. I do want to get down to the nice 14 names, and right now I'm at 16.
Yeah, Palmer would be a good one. I think Cook is the waste of a vote. I'm sorry, but
no, I actually don't think so. I think
if I could choose any, I'd choose Jobs, but not Cook.
All right, we got to go, man. It's
okay. Thanks everybody for watching. Follow these guys on Robinhood Weekly on Roy's channel, Tanner's channel, and we will catch you next week on the Bootleg Weekly. Thanks, y'all. Bye.
Bye.